There is a decision made every morning in this business that has nothing to do with which stock to buy, which level to watch, or which setup to take. It is made before any of that. It is made in the 60 minutes before the market opens, sometimes in the 20 minutes before you sit down at your screen, sometimes, if you are not careful, in the 10 seconds between your alarm going off and your hand reaching for your phone. That decision is this. Who are you going to be today when the market tests you? Not which trades will you take. Who will you be when the trades go wrong? Who will you be when the position moves against you by 2% and your stop is at 3? Who will you be when you miss an entry you had been watching for days and watch it run without you? Who will you be when a winning streak makes you feel invincible, or a losing streak makes you feel desperate? I am Jesse Livermore. I built and lost fortunes more times than most men have dared to dream of building one, and I can tell you, with the authority of every ruin I have walked through, that the single greatest separator between the traders who last and the traders who disappear is not strategy. It is not timing. It is not intelligence. It is what they decide about themselves at 6 in the morning before the chaos begins. The market is preparing for you right now. Every institutional player, every algorithm, every professional who has survived this business longer than you, they are all preparing. They are not just looking at charts. They are sharpening the mental condition they will bring to the session. They are deciding, in the quiet of the morning, who they will be when the pressure arrives. The losing trader wakes up and reaches for his phone. He checks futures. He reads headlines. He opens Twitter and looks at what other traders are saying. He absorbs other people's opinions and other people's emotions and other people's bias before he has had a single clear thought of his own. He walks into the session already compromised, already reactive, already carrying a room full of other people's noise inside his head. The profitable trader wakes up and prepares his mind before he prepares his charts. He asks himself the questions that have no ticker symbol. He makes the decision nobody talks about. And then, only then, does he look at the market. That gap, that single gap in the morning, that is what this video is about. If you have ever started a session feeling behind before a single trade was placed, like the market already had the upper hand before you even entered a position, stay with me through every chapter. Like this video now. Because what I am about to show you changes that. Permanently. Let me describe a morning that most people watching this video will recognize immediately. Not because it is unusual, because it is exactly what they did this morning. The alarm goes off at 6, maybe 6:30. The hand moves to the phone before the eyes are fully open. The first thing that enters the mind is not a thought. It is information. Futures up. Dollar down. Some headline about a central bank decision. A tweet from a financial account with 200,000 followers saying today is the day to watch this level. And someone in a trading group posting a chart with 17 lines drawn on it and the caption, "This is either going to explode or collapse." By the time the trader sits down at his screen, he has absorbed 45 minutes of other people's noise, other people's fear, other people's opinions, and he has mistaken all of it for preparation. It is not preparation. It is contamination. Because here is what he has not done. He has not checked his own internal state. He has not asked what emotional residue he is carrying from yesterday's session. He has not examined whether the loss from 2 days ago is still sitting somewhere in the background, silently pushing him toward a larger size today to recover what he lost. He has not noticed that he is slightly distracted by something at home. Yet something that has nothing to do with the market, but that will show up in his decisions the moment a trade moves against him. He is technically informed and psychologically unprepared. And in this business, that combination is more dangerous than knowing nothing at all. Because the trader who knows nothing is cautious. The trader who is technically informed but psychologically unprepared is confident. Confident in the wrong things, at the wrong time, with the wrong emotional state running silently beneath every decision he makes. I learned this the hardest way available. I had been on a run. Weeks of clean trades, well-sized, well-timed, disciplined. My account had grown to a number that made me feel something I should have recognized immediately as a warning: certainty. I woke up one morning and I did not prepare. I did not speak truth to myself before the session. I reached for the tape before I had checked who I was that morning. I walked into the session carrying the quiet arrogance of a man who had forgotten the market's most reliable rule. It does not care about your recent wins. By the end of that week, I was unrecognizable as the trader who had built that account. Not because my strategy had failed, because I had failed to be the person my strategy required me to be. The preparation I skipped at 6 in the morning cost me everything that came after, and it started with a phone screen in the dark before my eyes were fully open. There are 7 specific lies that the unprepared morning tells a trader. I call them lies because they feel like logic. They feel like reasonable thoughts. They are not. They are the emotional residue of yesterday dressed up in the language of strategy. The first lie: the market owes me a recovery today. Yesterday's loss has no relationship to today's market. None. The market does not know your account balance. It does not remember that you lost 3% on Tuesday and need to make it back on Wednesday. It does not factor your emotional need for recovery into its price action. But the unprepared mind believes at some level that it does, and that belief changes everything. It makes you size up when you should not. It makes you take marginal setups because you need activity, because inactivity feels like falling further behind. It turns patience into a form of punishment. The second lie: I already know what the market will do today. Most traders wake up with their minds already made up. If they fell asleep thinking about a setup, they dreamed of the entry. They woke up married to an analysis they formed yesterday with yesterday's information, and they bring that analysis into today as if the market asked their opinion overnight and agreed to cooperate. It didn't. The market simply is. And the moment you arrive at the session with a conclusion already formed, you stop reading the tape and start defending a position. The third lie: I feel confident, so I am ready. Confidence and readiness are not the same thing. Some of the most dangerous sessions I ever had began with the most confident mornings. A few winning trades in a row creates a feeling of alignment with the market, as if you and the market have found a frequency together and cannot be separated. That feeling is not information, it is dopamine. And dopamine has no edge. The prepared trader does not ask how confident he feels. He asks whether that confidence is earned by his system or manufactured by recent luck. That is a different question entirely. The fourth lie: reading more market content is the same as preparing. Scrolling financial news, watching pre-market commentary, reading other traders' analysis, none of this is preparation. It is exposure. And exposure to other people's bias, without first establishing your own internal clarity, means you are not preparing your mind. You are filling it. There is a critical difference between arriving at the session with a clear mind and arriving with a full one. The fifth lie: my emotions are under control because I have not noticed them yet. Unexamined emotion is not controlled emotion. Fear you have not named is still fear. A frustration you have not acknowledged is still distorting your judgment. The fact that you feel calm on the surface does not mean the emotional residue of yesterday has been processed. It may simply mean you have not looked for it yet, and you will find it at the worst possible moment when a position moves against you, and the response it triggers is not what your system prescribes. The sixth lie: I can fix a bad session with a good trade. This is how revenge trading begins. Not with a conscious decision to abandon discipline, with a story. The story says, one trade can change everything. One clean entry, one large position, one recovery trade that turns the session around. That story is the most expensive story in trading. There is no such thing as a recovery trade. There are only trades, each one separate. Yet each one decided on its own merits, each one either aligned with your system or not. The morning that believes in recovery trades will always find one, and it will always pay for it. The seventh lie: I do not have time for this. This is the lie that protects all the others. Because if you convince yourself that psychological preparation is a luxury, something for traders with more time, more stability, more runway than you, then you never have to do the uncomfortable work of honest self-examination before you trade. You can go straight to the chart and feel productive, and you can keep repeating the same mistakes with the full excuse that you simply did not have time to prepare otherwise. These 7 lies are the architecture of a losing morning, and they are all built in the 60 minutes before the market opens. So while most traders are scrolling their phones in the dark, let me tell you what I actually did in the hours before the market opened, not what I told myself I was doing. What I actually did on the mornings that produced my best trading and what I stopped doing on the mornings that produced my worst. I watched the ticker tape every morning with the same intensity, not because I was looking for the next big move, because I was preparing my mind for war. That phrase, preparing my mind for war, is not dramatic language. It is precise language, because the market is exactly that, an arena. And in an arena, the prepared feast on the unprepared. Discipline crushes impulse. And your worst enemy is never the bear or the bull. It is the voice inside your head telling you lies before the opening bell. So every morning, before the screen, before the news, before the tape told me anything about the day's movement, I stood before my reflection and I spoke truth to myself. Not affirmations that sounded inspiring but meant nothing when the position moved against me. Real truth, the kind that cut through the fog of greed and fear and left me standing in the clear air of honest self-knowledge. I said, I am here to follow the market, not to predict it. Those 8 words contain more trading wisdom than most courses will ever give you, because most traders wake up in the opposite posture. They are here to impose. They have formed a view. They have decided what should happen. They are here to execute their prediction, not to read the market's reality. And the market, which has never once asked for anyone's opinion about what it should do, will take their money calmly and completely. I said, my capital is my ammunition. I cannot fight without it. Every dollar in my trading account was a soldier. A general does not send all his troops into a single charge against an enemy he barely understands. But traders do this every day. They see a setup that looks promising and they commit everything. One idea, one trade, one moment. I had been broke 3 times because I forgot this truth. Preservation comes before profit. You cannot make money if you have no money to make it with. Each morning I reminded myself, my first duty today is not to make money. It is to not lose money stupidly. I said, I will wait for my pitch. In baseball, a batter can wait for the right pitch. In the market, you have that same luxury, but traders act as if they are penalized for not swinging. Yeah, they see movement and feel compelled to participate. They see others making money and panic that they are missing out. The great moves, the ones that build fortunes, do not come every day. They come when conditions align, when the trend is unmistakable, when the probability is stacked so heavily in your favor that not taking the trade would be the real mistake. Until that moment arrives, my job is to wait, to watch, to stay liquid and alert, not eager, alert. I said, the trend is my only friend, not hope, not pride, not revenge, the trend. When I looked at the tape, I was not trying to outsmart it or predict where it would turn. I was trying to see what it was telling me in that moment. Is money flowing into this stock or out of it? Are buyers stepping up with conviction or hesitating? Is price making higher highs and higher lows, or chopping in confusion? The market speaks clearly to those who listen without prejudice, but most traders do not listen. They argue. The market says down, and they say it should not be going down, so they buy. That is not trading. That is ego fighting reality. And reality always wins. I said, my emotions are not my guide. Fear will make you exit winning trades too early, snatching a small profit when a large one was developing. Greed will make you hold losing trades too long, hoping they will come back, or pyramid into winning trades recklessly after the move is nearly over. Both emotions whisper lies that sound like wisdom. Fear says, take your profit now. Be safe, when you should be letting your winner run. Greed says, add more. It's going higher, when you should be tightening your stop. I had learned at great cost, that the moments I felt most certain, most excited, most convinced, those were the dangerous moments. That is when I slowed down and asked, am I following my rules or am I following my feelings? I said, I will honor my stops. Non-negotiable. Stops are not suggestions. They are the line between a trader and a gambler. Honoring a stop means admitting you were wrong. It means taking a loss. Nobody likes being wrong. But in trading, being wrong is simply part of the process. The best traders in the world are wrong 40, even 50% of the time. What makes them successful is not their win rate. It is their ability to cut losses quickly and let profits run. Every trade I entered, I knew exactly where I was wrong. I had defined it in advance. And when the market touched that point, I exited. Without hesitation, without negotiation, without hope. Because hope and holding has destroyed more traders than any market crash in history. I said, I will not revenge trade. When you take a loss, especially one that stings, everything in you wants to jump back in immediately and make it back. Your ego is wounded. You feel the need to prove the loss was a fluke. But revenge trading is not trading. It is emotional reaction dressed up as strategy. It is forcing trades that are not there because you have a psychological need, not because the market is offering an opportunity. I have seen men destroy in hours what took them years to build, because they could not accept a loss and move on. These were my declarations, spoken every morning, before the tape, before the news, before any market information entered my mind. This was the 6 a.m. decision. So let me walk you through what actually happens inside the mind of an unprepared trader from the moment the market opens. 6:30 in the morning. The pre-market is moving. The trader is watching price. He has opinions. He has levels. He has a setup or two on his watch list. He feels ready. 9:30. The bell rings. In the first 3 minutes, something happens that has nothing to do with his charts. The volatility of the open, the noise, the gaps, the sudden movements in both directions triggers a response in his nervous system. His breathing changes. His focus narrows. The calm he had while watching pre-market gives way to something more urgent, something that his body is interpreting not as opportunity, but as threat. This is the moment the unprepared mind loses control, not dramatically, quietly, invisibly. All the decisions that follow feel logical in the moment. They feel like trading. But they are being made by a nervous system in mild survival mode, a nervous system that is looking for relief from the tension, not for the best execution of a well-designed system. So he enters too early. Not because the setup is valid, because the activity of the open feels like it demands participation. He enters because doing nothing feels more uncomfortable than doing something. He enters because the traders in his group are already posting entries, and he does not want to be the only one sitting in cash. The position moves against him immediately. Now the second phase begins. He tells himself it is just the noise of the open. He tells himself the real move has not started yet. He enlarges the time frame so the loss looks smaller on the chart. And he checks the news to find a reason why the trade should still work. He is not trading anymore. He is managing an emotional crisis inside a financial position. And the stop he set with perfect logic before the session began, is now approaching. And every tick toward it feels like a verdict. Not about the trade, about him. This is what the unprepared morning produces at 9:45. Now consider the trader who prepared at 6 a.m. He said the words. He made the declarations. He reminded himself that his emotions are not his guide. He reminded himself that he is here to follow the market, not to fight it. He reminded himself that a loss is data, not a verdict. and that honoring his stop is not failure, it is professionalism. When the bell rings and the volatility arrives, he is not surprised by it. He expected it, yet he prepared for it. His nervous system does not interpret the chaos as a threat because he arrived at the session having already decided who he would be inside that chaos. The position moves against him. He watches it. At the stop, he exits. Clean. Final. Without negotiation. He has just done something that feels small but is enormous. He has executed his system under pressure. He has been the trader he decided to be at 6 in the morning. And that execution, that single clean exit at the stop, is worth more to his long-term account than any winning trade he will make that session. Because it proves something to himself that no win can prove, that he can be trusted with his own capital. I want to tell you about a specific morning, not a composite. A specific morning that I return to when I need to remember why the 6 a.m. Oppo decision is not optional. I had been winning, more than winning. I had been on the kind of run where the market seemed to move in accordance with my predictions before I had even finished forming them. The tape was speaking to me in a language I understood completely. My sizes had grown, gradually, almost imperceptibly, but they had grown. My confirmation requirements had loosened because the trades were working before full confirmation arrived. My stops had widened because I could not imagine being wrong on these setups. I woke up that morning and I felt something I should have immediately recognized as dangerous. I felt certain, not confident, certain. The kind of certainty that comes not from your system, but from a string of wins that your ego has decided is evidence of mastery. I did not stand before my reflection that morning. Yet I did not speak truth to myself. I did not remind myself that the market owed me nothing, that my capital was ammunition and not a reward for recent performance, that the trend was my friend and my emotions were not. I opened the platform. I looked for what I wanted to see, and I found it, or believed I did, with the comfortable speed of a man who has decided he no longer needs to ask whether what he sees is real. The first trade was wrong. The size was wrong. I held past my stop because the certainty I had carried in from the morning told me the market was making a temporary error and would correct itself in my favor shortly. It did not correct. It extended, and the extension moved my loss from manageable to significant. I revenge traded. Not impulsively, with reasoning. I had a story for each new position. The story always explained why this next trade would recover what the previous one had cost. Each story was logical on its surface. Each story was built on the same foundation. The belief that I was right, and the market had temporarily misread the situation. By the end of the session, I had not just lost the day. I had lost weeks of careful, disciplined accumulation in a single session, because I had walked in that morning without doing the work that protected me from myself. The next morning I woke up broken. Not financially broken, though the financial damage was severe. Broken in the more important way. My confidence in my own judgment was shaken to the point where I did not trust a single thought I had about the market. And in that brokenness, I found something I had been avoiding for weeks: humility. But I stood before my reflection that morning, and I did not speak about confidence or edge or setups. I spoke about what I had done and why. I named the certainty. I named the ego that had decided it no longer needed to prepare. I named the revenge trades and the stories I had told myself to justify them. I named all of it in the light, before the tape. That morning, the morning after the ruin, was one of the most important mornings of my trading career, not because of what I did in the session that followed, because of who I decided to be before it began. The session itself was modest, small size, patient, clean entries and clean exits. I did not recover the losses that day, but I recovered something more important. I recovered my relationship with the 6 a.m. decision, and I never missed a morning again. Yet let me give you the exact structure of what a prepared morning looks like. Not as inspiration, as architecture. There are 6 declarations that belong in every trader's morning before any market information is consumed. They are not affirmations. They are not motivation. They are precise psychological positions, commitments made in the calm of the morning so that the heat of the session cannot override them. Declaration 1. I am here to follow the market, not to predict it. Say this and mean it, because the impulse to predict is constant. Your brain is a pattern recognition machine that will always try to resolve uncertainty by forming conclusions. The market does not reward conclusions. It rewards responses. Every morning, before you open a chart, remind yourself your job today is to see clearly, not to be right. You are an observer first, a participant second. The moment you arrive at the session having already decided what will happen, you have stopped trading and started gambling with analysis attached. Declaration 2. My capital is my ammunition. Preservation comes before profit. This declaration counters the single most destructive impulse in trading, the impulse to turn every session into a money-making event. Not every session should produce profit. Some sessions should produce nothing except the preservation of your capital for the session when the real move arrives. The trader who needs to make money today will force trades. The trader who has decided that survival is today's primary goal will not. And the trader who survives consistently is the trader who eventually profits enormously. Declaration 3. I will wait for my pitch. Dad, you are under no obligation to trade today. Read that again. You are under no obligation to trade today. The market will offer inferior setups every session alongside the superior ones, and the only way to take the superior ones is to refuse the inferior ones. Patience is not passive. Sitting in cash while a mediocre setup plays out without you is one of the most active, disciplined decisions a trader can make. Declare this in the morning and mean it. I will not swing at bad pitches today, no matter how long I have been waiting or how much I need the activity. Declaration 4. My emotions are not my guide. They are my test. Fear and greed will both arrive today. They will both sound reasonable when they speak. Fear will say, take the profit now. Protect what you have. Greed will say, add to the position. It is going further. Boss, neither of these voices is your system. Neither has an edge. Name them in the morning before they arrive. Tell yourself, when I feel the urge to take profit early, I will pause and ask if my exit criteria have been met. When I feel the urge to increase size, I will pause and ask if the market has given me permission or if my emotions are manufacturing one. Declaration 5. My stops are sacred. I will honor them without negotiation. This declaration must be made every morning because it is the rule most frequently broken under pressure and the one most responsible for account destruction when it is. Your stop was set by the calm version of you, the version that was not inside a live position, not watching money leave your account, not feeling the identity cost of being wrong. And that calm version of you was wiser than the version inside the trade. Trust the decision made in the morning over the impulse felt in the session. Declaration 6. I will not trade to recover. I will trade to execute. Recovery trading is the fastest way to compound losses. The mindset that needs to make back what it lost will size up, will force entries, will hold positions past their expiry because letting them close means accepting the original loss is real. Declare in the morning, today's trades are not related to yesterday's results. Each trade stands alone, sized correctly, entered with valid criteria, managed according to the system. If yesterday was a loss, today is not a recovery mission. It is simply today. Speak these 6 declarations before the screen opens, not once, multiple times. And let them move from your conscious mind into something deeper. You are not programming motivation. You are programming a psychological state, a state of clarity, neutrality, and disciplined readiness that the chaos of the session will immediately begin trying to dismantle the moment the bell rings. The declarations are your armor, built in the morning, worn all session, rebuilt the next morning without exception. I want you to think about this not in terms of a single session, but in terms of a year. A trader who prepares psychologically every morning will, over the course of 12 months, make a specific category of mistake far less frequently than the trader who does not. Not all mistakes. No preparation eliminates all mistakes. But the mistakes that come from unexamined emotional state, the revenge trades, the oversized recoveries, the held losses waiting to become recoveries, the exits taken too early because the win needed to feel certain, these will reduce. That reduction compounds. Not in the obvious mathematical way, in a subtler and more durable way. The account that does not have a catastrophic month. The drawdown that stays manageable instead of spiraling into an identity crisis. The losing streak that does not cascade into a series of increasingly emotional decisions because the trader was prepared enough each morning to meet it with something other than panic. I said in the morning practice, success in this business is not about perfection. It is about persistence, getting back up after losses, maintaining discipline through winning streaks, staying humble when you are right and staying calm when you are wrong. Yet that persistence is not available to the trader who does not prepare, because an unprepared morning produces an unanchored session. An unanchored session produces reactive decisions. Reactive decisions compound into patterns, and patterns in trading determine outcomes more completely than any individual trade ever will. The trader who prepared this morning made a small investment in the version of himself that will be trading 6 months from now. He spent 15 minutes with his own mind before the market could get to it. He arrived at the session with clear eyes and a stable psychological foundation. His losses today will be sized correctly and cut cleanly. His winners today will be allowed to develop. His session will end when he decided it would end, not when the market forced him out. Over time, as these sessions accumulate into something that cannot be back-tested or calculated with an indicator, they accumulate into a trading mind, durable, consistent, honest, the kind of mind the market will eventually reward simply because it is still here, still executing, still prepared, while every undisciplined account around it has been emptied. The great gift of the market, and I mean this precisely, is not money. It is what the pursuit of money in this arena demands that you become. Every morning that you prepare, you are building something more valuable than your account balance. You are building the capacity for self-mastery. And self-mastery, in the end, is the only sustainable edge available in this business. Let me draw the sharpest possible line between two kinds of trader. Not by their strategy, not by their capital, but by their 6 a.m. decision. The amateur needs certainty before he trades. He wants to know the trade will work. He wants more confirmation. He wants the setup to be more obvious, the trend to be more unmistakable, the risk to be lower. He is waiting for a trade that cannot lose, and the market, which never offers such a trade, never fully satisfies him. So he either waits forever and trades too rarely, or he convinces himself that certainty has arrived when it has not, and trades at exactly the wrong moment for exactly the wrong reason. The professional is comfortable with probability. He knows every trade is uncertain. He knows his system has an edge over hundreds of trades, not on each individual trade. He is comfortable placing his bet when the odds favor him, knowing this specific instance might not work, knowing that over time the percentages will produce profit. He does not need certainty. He has something better. A process. The amateur needs action. Cash feels like punishment. Sitting flat while the market moves feels like missing opportunity. So he forces entries. He finds setups in noise. Yet he trades his boredom and labels it diligence. He confuses activity with productivity. He does not understand that the most profitable decision he could make on many days is to do absolutely nothing. The professional understands that cash is a position, often the best position. He can watch the market move for hours without participating and feel no urgency, no anxiety, no FOMO. He knows that his edge is not in how frequently he trades. It is in how well he trades when the moment is right. He is not falling behind when he sits in cash. He is protecting his ammunition for the setup that deserves it. The amateur trades to feel something. Excitement, vindication, revenge. He needs the emotional experience of having money on the line, the tension, the resolution, the story. His trading satisfies something in him that has nothing to do with his financial goals. The professional trades to make money, and he has learned through expensive experience that feelings and profits rarely coincide. The trades that feel exciting are often the worst ones. The trades that feel boring, the ones that follow the system without drama and resolve quietly at the target, those are the best ones. He has made his peace with boring. Boring means the system is working. Boring is the sound of an account growing steadily. The amateur skips the morning declaration because he does not believe it matters. He believes results come from setups, from entries, from information. If he just finds the right indicator, reads the right book, finds the right mentor, the trading will work. The internal work seems soft, optional, secondary. Yes, the professional knows that the internal work is primary. It is the foundation everything else is built on. The strategy is the house. The psychological preparation is the ground it stands on. And no house stands long on unstable ground, regardless of how well it is built. The 6 a.m. decision is where the professional and the amateur diverge. Every morning, before either of them opens a chart. Let me tell you exactly what to do tomorrow morning. Not in theory. In the precise sequence that builds the trading mind over time. Wake up before the market has any claim on your attention. 15 minutes minimum before you touch your phone, your platform, or any financial content. This window is yours. Guard it. In that window, speak the 6 declarations. Out loud if you can. In writing if that is what the precision demands. Not quickly. The way you might rush through a checklist. Deliberately. Let each one settle before the next. I am here to follow the market, not to predict it. My capital is my ammunition. Preservation comes before profit. I will wait for my pitch. My emotions are not my guide. They are my test. My stops are sacred. I will honor them without negotiation. I will not trade to recover. I will trade to execute. After the declarations, spend 5 minutes with yesterday. Not to punish yourself for what went wrong, to extract the information it contains. What decisions did you make that were system-based? What decisions were emotion-based? Where did the prepared version of you show up? Where did the unprepared version take over? Name both with equal honesty. The wins teach you what the system looks like when it is working. The losses, at the ones examined honestly, teach you where the system ends and the emotion begins. Then, and only then, open your platform. Open it as a different person than the one who went to sleep last night. Not different in strategy, different in state. Grounded, clear-eyed, honest about the emotional conditions you are operating in, committed to the declarations you just made, ready not to make money, but to execute your process and let the money take care of itself. Do this every morning, without exception, even on the mornings when you are not trading, even on weekends when the market is closed, because the practice is not about the session, it is about who you are becoming. The great operators, the ones whose names are remembered, the ones who accumulated across decades. They were not born with superior nerve or superior intelligence. If they were not protected from loss or immune to fear. What separated them was a single daily commitment. The commitment to show up to the market as a prepared person rather than a reactive one. To meet the chaos with something built before the chaos began. That something is built at 6 in the morning. Not in the charts, not in the news, not in another person's analysis or another person's signal or another person's conviction about where the market is going. In the quiet, before the noise, in the space between your alarm and the opening bell, in the 15 minutes that most traders waste, and the few used to become who the market demands they be. I am Jesse Livermore. I have been broke, and I have been rich, and I have been broke again. I have seen fortunes made and fortunes destroyed. And I have watched brilliant men fail and average men succeed. And after all of it, after every win and every ruin, I can tell you with complete certainty that the difference was never where they traded. It was how they woke up. Start tomorrow morning. 15 minutes, 6 declarations, 5 minutes of honest review. Then the market. Do it once and you will feel a difference. Do it every day and you will become one. If this video gave you something real, if it named something you have been carrying into sessions without realizing it, like this video right now, leave a comment and tell me, which of the 6 declarations do you need most right now? Is it the one about stops? The one about not trading to recover? The one about waiting for your pitch? Tell me. I want to know where you are. And subscribe. Because this channel exists for one reason only, to tell you the truth about what trading actually demands from you. The next video is already waiting.